Alrighty, welcome to our first Expat Ladies Workshop. This is the first in a quarterly series of workshops that's focused on an ongoing dialogue about the unique set of challenges and opportunities that are faced by women expats. Before we begin today, I just want to mention that we'll be recording today's session, and we'll be putting everyone on mute until the Q&A session at the end. So please feel free to ask questions in the chat, and I'll do my best to answer them either as we move along or right at the end. If you prefer not to have the Q&A session recorded, just please type that into the chat box and we'll definitely cut that part out. But today we'll really talk about finances. However, as a group of expat ladies in the future, we'll also discuss personal well-being and health, along with career planning and strategies for getting the most out of expat life, charitable giving, and much more. So please be sure to check out our LinkedIn group for an ongoing dialogue and an opportunity to connect, to share ideas, and really support each other in our international journeys. Before we dive into today's agenda, let's just take a moment to take a look at some interesting statistics about women and investing. First, did you know that women are more disciplined savers than men? Despite having substantially lower paychecks, women tend to have higher savings rates. And Fidelity, back in 2017, their survey found that women save on average about 9% of their paychecks compared to 8.6% saved by men. So that's really good. Additionally, women are more likely to follow advice of their financial advisor. That is backed by research, of course, and that's something I've witnessed as an advisor in my career. So ladies are, of course, a pleasure to work with always, and they follow advice, which is a great bonus. Additionally, women are less likely to trade than men and earn better investment returns. Research from Vanguard indicates that women are up to 50% less likely than men to trade actively. And on top of that, men tend to look at their investment portfolios once a week. The tendency to leave our investments alone actually make women more successful in their long run when it comes to returns, because on average, women earn up to 1% better return than men. That may not seem like much on the surface, but over time, that's a really big gap that really compounds over time. So those are all the great positives. Now, unfortunately, women are 80% more likely than men to be impoverished during retirement. And really much of that disparity comes from the compounding effects of lower pay and potentially fewer working years as a result of career breaks due to caregiving and other responsibilities. Add on to that longer life expectancies for women, and it can really create potentially a dire situation for women during retirement. Also, only about 39%, additionally, about 39% of women have no retirement strategy compared to 25% of men, and only 19% have a written plan in place. And that is why we're meeting today. It's to begin to understand and hopefully really improve our financial well-being. So with all those statistics behind us, the agenda for the day is to really talk about financial planning for women. We'll start by discussing what financial planning entails and how it really looks like. We'll also talk about the different factors that impact our financial future and our plans as women. We'll talk about how to start making a plan, and given that most plans have something to do with retirement, we'll also talk about different vehicles that can help us save and really how to get started. And of course, as I mentioned before, we'll have a question and answer session closer towards the end. So with that, Let's start with what financial planning really is and how does that look. It really is an ongoing process for providing directions for achieving the goals. So it could be a goal of saving for a house or saving for retirement or planning to start your own business. And really the first step in the planning is setting that goal, but remembering that it's an ongoing process of monitoring progress, how we get to that goal. And it's never too late to get this started. Goals may be different at different stages in life, but it's important to definitely have a roadmap so that assists us in achieving those goals. Where I work at Dunhill Financial, we help a lot of clients with comprehensive plans to address a number of different areas. So depending on your specific situation, we might be focusing more on estate planning or retirement planning, financial management, tax planning, insurance. It really is very specific to everybody's situation. But most importantly, financial planning is not a one-time event. It's something that you want to review at least annually and really track changes and adjust your plan as life happens and different life events occur. We want to be sure that our plan is updated alongside that. So with that, let's watch a brief video here. All right.
As a professional woman, you're balancing competing priorities, advancing your career while finding time to care for your family. Whether it's board meetings or book reports, long days at the office, or long nights taking care of those you cherish most, managing it all is just another day's work. But have you ever stopped to think about how critical your role is to your family? Consider this. If women were to be paid for the work associated with caring for a household, the value would equal $90,000 on top of their wages. For those who care for the household full-time, the value equals $140,000 annually.
So that is really to say that we are definitely very valuable to our households, and that puts it really in dollar terms. But in reality, we really often have to balance our careers with our private lives and caring for others. And for many of us, that includes raising children, which is the most rewarding experience, but that might also mean shorter careers and possibly lower pay. We are also often, as women, we're also often looked up to take care of our aging parents. I mean, they raised us, so we owe it to them. However, that could mean less time at work or less time for other activities. And then also aging spouses. Of course, we've got longer life expectancies, and so we often end up being the caregivers for our spouses. And so eventually we're left to manage our own finances. But all these relationships with children, with parents, with spouses, that all impacts our retirement savings. It's not to say that we're doing something wrong or we're doing something right. It's just to point out that we need to factor in how these different responsibilities outside of work really impact what we do with our finances. So now that we know a little bit better what financial planning is and how others influence it, let's really focus on making a plan for our own well-being. Let's take care of ourselves. And here I'm talking about two different types of plans: a financial plan, but also a personal one. The hope is that in a series of quarterly workshops that we'll be having, we'll encourage you to really focus on yourself and start planning. So today we start with financial plans. Let's first maybe talk about how a financial goal could look like. As an advisor over my career, I've seen many variations of different plans. And it seems to me that it boils down to three main themes. First one being retirement, where somebody says, hey, this is the age when I want to stop working and I don't want to do anything else in terms of work for the rest of my life. I just want to see from a financial standpoint, is that feasible? Others may say that they're looking for more of a financial independence plan when work becomes a choice and they're able to engage in other activities, maybe volunteering or starting a business just for fun, but something that gives them the financial independence so they don't have to depend on their paycheck. Yet another type of plan that I've seen quite a bit is scaling back on work. And so recently I spoke with a really, really nice lady who had this really great plan. When she's in her 30s, she'll scale back to 4 days a week, and then in her 40s to 3, 2, 1. So all of that can be modeled in a long-term cash flow to see, is that feasible? Is the next 30, 40, 50 years of my financial life, is that sustainable? Can I really achieve that goal? So from an advisor perspective, that's really, really interesting to see. And I certainly would encourage everybody to have a plan of that sort. Now, of course, in financial planning, the key, the first step is to identify really what your specific goal is, and to write it down, and don't be afraid to dream, because that's how we envision that's how you envision your future. So another common goal that I see would be maybe someone who is living in the US and wants to move to France. So that's kind of the goal. Then they would tell me, hey, I want to get this done within the next 3 to 5 years. So we have a time frame. And then we work together on how are we going to make that happen, right? Whether it will be selling the primary residence in the US, maybe purchasing a residence in France, figuring out the budget, figuring out the cash flow, whether that's sustainable or not. So that's one example. Another one could be where the goal is, this is from actually my friend's goal that she let me share. She wanted to start a cafe that's catering to moms and kids in the local area. And her time frame is 6 months to a year. And then the how in implementing that goal would be, of course, identify appropriate space, draw up a business plan, reach out to her network, figure out financing, figure out how that cash flow would look like, and see if that's feasible. So that's really how we begin. It's just to dream and figure out how should that future look like. So hopefully at the end, if we have some time during the question and answer session, if you have some interesting ideas you'd like to share in terms of how your retirement would look like, we would love to hear that. And of course, when finances are taken care of, your personal well-being will also improve. So making that plan can also improve personal well-being. And that's personal well-being overall is definitely an important topic that we'll cover in the future. But today, since the most common question from a financial standpoint is how to plan for retirement, I want to take some time to talk about some general themes that are important when considering retirement planning. So how will your retirement look like? It really depends on several different factors, right? Depends on where your income will come from, how your expenses will look like, what kind of assets you have saved up for. So first, when we look at potential income sources, a lot of people that I talk to often want to depend on pensions and social security, not realizing often that these will actually be rather small contributions to your monthly income sources in retirement. And most of the time, they'll not be enough to sustain your lifestyle. And so that's why in the middle I put investments, because saving up and being in charge of your future, that really gives you the most flexibility to do what you want to do in the future. So in terms of income sources, for a lot of people, how you save and how much you've accumulated in investments will likely be the determining factor if and when and how you'll retire. And of course, for some, if you haven't saved enough, sometimes work in retirement will also be a consideration. So that's an important roadmap when beginning to plan for retirement. Of course, for us as women, there are important risks that we shouldn't ignore that lie ahead of us. Of course, pensions and Social Security, the main danger is, again, people putting too much weight that will contribute a lot more to the income source, whereas in reality, pensions and Social Security usually, pension and Social Security usually is a small contributor to the overall retirement income. As far as inflation, that's increasing prices over time that lessen our purchasing power. And so we know that ideally, when you do save, you certainly don't want to stay in cash because cash just loses purchasing power over time. Of course, you want to have an emergency savings account. So we recommend keeping about 3 to 6 months of expenses in your bank account in cash so that you can dip into that for emergencies. But anything else that has a long-term goal assigned to it, 3, 4, 5 years away, that's what should certainly be invested. Now, as far as investments, we certainly need to talk about market risks. We want to be sure that when you get invested, that the level of risk that you're taking is something that you're comfortable with, that you're able to still sleep at night as your portfolio value is fluctuating. So that's something that's important to talk through with your advisor. But market risk is not the only factor that can affect your balance sheet or financial well-being. A big one for women is longevity, because as women, we have longer life expectancies and lower retirement balances than men. So we should definitely be preparing even more diligently for that potentially long extended period of time when we don't have earned income. So with that, another important consideration is how we save and which investment vehicles we utilize. So ideally, we want to utilize the tax advantaged vehicles first. And here I decided to put that picture up because oftentimes when I talk with women, and that happens more with women than men, is that they admit that they don't invest because they don't know how to get started or they don't understand the jargon that's used in the financial industry. So it's like that big alligator, and we feel so small next to it. But really, these ideas can be pretty simple, and it really boils down to a couple of choices that you have. So if we're talking about saving for retirement, first place I would look is whether my company offers a pension or a 401k plan, because usually there's a tax benefit associated with setting money aside in a pension or a 401k. So in a 401k, for example, maybe if you're in the US, your company might also match the contributions that you make, and you often have a choice of either making a pre-tax or a post-tax contribution. Again, these two are on top of my list because those are the two that we want to look at first to see how we can minimize our taxable liability while also saving for retirement and reaching our long-term goals. The limits of how much you can set aside in a pension or a 401k are much higher than IRAs or Roth IRAs. IRAs and Roths currently are $6,000 per year or $7,000 per year if you're over 50. And there also are tax benefits associated with those two accounts. In essence, a traditional IRA, when you contribute to that, you might receive a tax deduction depending on your tax situation, and then your money grows tax-free until you have to start taking required minimum distributions at age 72. A Roth IRA is an account where you make an after-tax contribution. You never get a deduction for it, but eventually when you take the money out, the goal is to take that out tax-free. So again, utilizing tax advantage vehicles first is really key. That will help you grow your savings a lot faster. Of course, other options, if the top three are not something are not an option for you in your specific situation, of course, you can always consider a regular investment account where you just maybe do monthly contributions or a lump sum contribution. But as that account grows and you build in capital gains, those capital gains would be taxable as you buy or sell securities. So that there's, of course, no tax advantages to that type of an account. At the bottom of my list are annuities, because those are really, I would say, the most complex products that you could consider in the financial world. And they, most of the time, are not appropriate for most investors. They're usually expensive. I've seen annuities that have a lot of hidden fees, fees to the tune of 3, 4, 5%. And really, annuities in the general scheme of things, they're built for people that have not been able to save enough for retirement. And so if you're in that situation, that's definitely a great topic to discuss, either with myself or your own financial advisor. But those are the different options as to where and how we can save. Again, these can be quite simple, even if they look a little scary on the surface. Of course, when working on your financial plan, an account selection is important, but also making a budget and paying yourself first is really, really key. When I say the word budget, that I know that from experience that makes a lot of people uneasy, but really what I mean here is really paying yourself first and making sure that the monthly income that you have, that you divide it up so that you are saving for your future. And a dollar saved today, maybe if you're in your 30s or 40s, is going to be definitely worth a lot more than a dollar that you save when you're 50 or 60 because of the compounding effect. You don't have as long of a time for the money to grow if you start saving later in life. So even small amounts, but small amounts today can definitely have a big impact longer term. So definitely an important consideration in financial planning. Another idea I wanted to bring up that I often get asked about are important milestones or ages that one should be aware of when planning for retirement. So that first threshold is age 59 and a half. That is when when the IRS 10% penalty for early distributions out of IRAs or 401ks no longer applies past that age. So that's why that's important. Another one would be when you can start drawing your Social Security. You can take it as early as age 62. However, if you wait till your full retirement age, which for most people is between 66 and 67, but it's really based on your date of birth, that's when you get a higher amount. Essentially, currently, your Social Security still grows by about 8% for every year that you wait between 62. You can take it as late as 70. And really, when you take it depends on how long you think you'll live. So that's, I know, a tough question to answer, but that's really the bottom line. If you are healthy and don't have any health issues and have a healthy cash flow, waiting with taking Social Security might be the right strategy. And then lastly, age 72 is an important consideration as well, because if you have pre-tax 401k accounts or you have traditional IRAs, at age 72, the IRS actually requires that you start taking your required minimum distribution. That is based on your life expectancy and IRS life expectancy tables. It's really important to take your required minimum because the IRS has a 50% penalty if you don't do it in time. So definitely something to plan for. And also, if you retire early, let's say you retire in your 60s, perhaps Roth conversions prior to age 72 could be a good idea. So that's something to definitely discuss with your financial advisor. So those are the important milestones I wanted to bring up. And I realize that this is really very general information, definitely feel free to reach out to me for more, and I'm sure we'll have more sessions with more details on these in the future. But to wrap up today's presentation, really last big topic I wanted to talk about has to do with considerations for those of us that are living abroad and have U.S. association, whether through a citizenship or a green card, and that means we have to comply with the IRS's tax code. We have to file our taxes in the U.S., but that also comes with some benefits. One thing that I frequently hear people don't know about is that as an expat, even with foreign income, you may be able to make an IRA contribution in the States. Of course, there are guidelines around it. Essentially, you have to have earned income that's not excluded by the foreign earned income tax exclusion. And there's a couple of other factors that I don't want to bore you with, but if you do have questions about whether you qualify for a contribution, certainly let me know. Another important consideration here is keeping track of your pensions. Many of us live in different countries at different stages of our lives. And so if you maybe lived in France and then in Belgium and then in Germany, make sure that you keep track of different foreign pensions that you qualify for, because later on in life that will be important. And even as we're doing a financial plan for you, we certainly want to know what those future income sources will be. Another important consideration for expats is currency exposure. So when doing financial planning for yourself in the future, you want to be sure to think about the currency in which you buy your bread, essentially currency of choice for your daily life. And with that, you want to prepare for that, because if you spent maybe majority of your life in the States, potentially majority of your investments are in US dollars, you want to be sure to have an appropriate hedge in your portfolio towards the euro, for example, if you're maybe retiring in France. So that's an important consideration because of course dollar goes through cycles, and what dollar to euro or dollar to pound exchange rate is today, that may be very different a year from now. And then lastly, PFICs, passive foreign investment companies. When living abroad, you might be approached by your local banker to invest through European exchanges. However, if you have an American association, you want to be sure to avoid that, because if you purchase something from an exchange that's not in the US, the IRS is going to look at that, and it will receive less favorable tax treatment, or in essence, it will be taxed at a much higher rate than an investment that you would have purchased through a US exchange. You definitely want to watch out for that and be sure to go through the US when making those investments. So that wraps up our introduction to financial planning, I would say. Definitely feel free to reach out to me with any questions. However, I do want to let you know that we plan to host these events for women quarterly, and we'll be discussing different topics along the way. We'll be posting on our LinkedIn page and on Eventbrite the next date for the next event. However, the different topics that we'll be covering in the future will have to do with personal well-being and health. We'll be talking about fulfilling careers for us as women. We'll also be talking about estate planning and how to talk about that to family. We might also include charitable giving and financial education for kids. So lots of interesting topics to come in the future. But for now, that really concludes the I guess, educational part of our webinar today. So we'll move into our question and answer session. We'll go ahead and unmute everyone, so feel free to ask questions. We'll also take a look at chat and address some of these questions from the beginning. So let me just take a look and see what we have. Let's see.
Hello?
Yes.
Yeah, I was gonna ask if you know the different Zoom links for Meetup for this
I'm
one.
sorry. I'm sorry. Could you say that again? I didn't quite hear.
I was gonna ask if you know the different Zoom links for this meeting every Wednesday.
You mean if Wednesday is a good time for the meeting?
Yeah, I mean this one, as I wanted to know if the Zoom link is gonna be on Meetup every Wednesday, this one.
Oh, gotcha. You know, we're planning to have quarterly events, and usually we'll target Wednesdays. I just couldn't promise that it will always be on a Wednesday, but it seems Wednesdays seem to work for most people, so we'll likely target that unless we have feedback that it doesn't work.
Okay, because I wanted
Okay.
to know if the Zoom link will be the same as always.
We'll definitely try to keep the time consistent whenever possible. Now, as we invite guest speakers, we'll also want to cater to their schedules, but whenever possible, again, we'll try to have the same time each quarter whenever possible.
Okay, because I was gonna say if you could put the Zoom link in the chat.
Absolutely. Whenever the new date and topic is announced, we'll be sure to share that. And in fact, when we send a follow-up email following this event with a recording from today's session, we'll be sure to include a link to that as well. Thank you for that feedback, Samuel.
Is it possible to take your email?
Absolutely, yes. Well, I'll share my email here shortly. If you'd like to contact me directly, my email is just right on the left side of this page here. And then with that, Samuel, thanks so much for your question. Yeah, so moving on to a question from Martha. Martha is asking, do you have an office where you receive clients? Where's everyone located? So at Dunhill Financial, our main office is in London. That's where majority of the team is located. I personally work remotely from Poland, and then we have Isa, who works from Germany, but most of us are in London. Certainly an in-person meeting there is possible. We usually, however, start with online meetings, and then we can definitely discuss in-person meetings on case-by-case basis, Martha. So I hope that's helpful for you as well. And then we have a great question from Rhonda. What is the minimum amount of savings one should have before considering contacting a financial advisor? Thank you for the question, Rhonda. Really, with Dunhill Financial, we have different programs and there is no minimum. So if you wanted to get started and just start an investment account and put money aside, we do have more of a robo platform with lots of resources that you can utilize, and we can definitely advise how to get started. And then as your situation gets more complex and you accumulate more savings, there isn't necessarily a threshold, but as you perhaps own real estate in different countries, or you have questions about pensions in different countries, or you own businesses or thinking about buying a house, and really have those types of questions, reach out to us. We'll help you determine which path would be best. And looks like those were all the questions that we've had from the chat. If there are any other questions, I think everyone should be unmuted right now. So if you'd like to ask, feel free to do so. Or if not,
hi, Anya. It's Rhonda.
Yes.
Can you hear me
Rhonda.
okay? Hi.
Yeah, I can hear you very well. Thank you.
I see that you have a LinkedIn group, Expat Women's Wellbeing. So do you plan on, I haven't joined the group yet, so do you plan on posting some things on a somewhat regular basis on that to let's say encourage following and maybe also to some tips and advice to get people started, and also for the next quarterly update?
Absolutely great question, Rhonda, and thank you for reminding me about that. Yes, we do have our LinkedIn group, Expat Women's Wellbeing, and we will be doing regular posts. So in between these quarterly workshops, we'll be posting to encourage you to, whether it be financial planning, we'll be posting different tips and interesting facts on that. And as we're talking about personal well-being or career planning, we'll also be posting there as well. So definitely join our group. We would love to have you and would love to make that an ongoing dialogue and hear more about maybe topics that interest you. So we would certainly love to have you. And Rhonda, thank you for that great question. That also reminds me that we also have our YouTube channel with Dunhill Financial, where we have a wealth of knowledge on different topics, whether it be estate planning in France or financial planning for those in Spain, a variety of different topics, a variety of different videos that we've done, very informative. So if you have a chance to look at those are some great resources we wanted to share. Alrighty. Well, I very much thank you for attending our meeting today. Definitely stay in touch, and we would love to hear any feedback you have about today's session, anything else you'd like to learn about in the future. If you'd like to be a speaker at a future event, let us know. And again, thank you so much for attending.